This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Monday, August 10th, 2026. I am John.
And I am Mary. We are your smart friends on the go, bringing you today's news minus the noise.
Let's start with a massive price tag in the sports world. A group led by investor Amit Bhatia is closing in on a 30% stake in Liverpool Football Club. The group includes Amazon's Jeff Bezos and Facebook's Eduardo Severin.
The deal values the team at nearly $6 billion. But here is the catch. This is not about selling more tickets or jerseys. Elite sports teams do not work on normal business math anymore.
Right. The current owners, the American conglomerate Fenway Sports Group, bought the club for about £300 million back in 2010. Now, they are cashing in on an incredible markup.
So who benefits here? Fenway Sports Group captures the massive profit, and the billionaires get a scarce luxury asset. It is like buying a Da Vinci painting, not a factory. You cannot simply build a brand new, culturally entrenched Premier League team.
Exactly. It is a pure, irreplaceable monopoly. These ultra-wealthy investors are not buying for the yearly profit check. They are buying a cultural institution that no one else can replicate. The power flows directly to those who hold scarce assets.
Moving to the global stage, let's look at fast fashion. Shein is planning its IPO, or initial public offering, in Hong Kong, but the numbers are shrinking fast.
Back in 2022, Shein was valued at $100 billion. Now, they are aiming for under $30 billion. Bloomberg Intelligence thinks it could drop as low as $22 billion based on future earnings.
That is a 70% crash. Why? Investors are pulling their money out of physical supply chains. Moving high volumes of cheap clothes around the world involves too much trade friction right now.
The big money is shifting elsewhere. The United States job market is cooling off. Because of this, investors expect the Federal Reserve to be dovish. That simply means they expect the Fed to lower interest rates to stimulate the economy.
With cheaper money expected, investors want safe bets. They want companies with total market dominance, not vulnerable physical retail operations. Capital flows towards structural dominance.
Speaking of pushing boundaries, let's look up. NASA's James Webb Space Telescope just captured new infrared images of the Lion Nebula.
The Hubble Space Telescope took pictures of it back in 2000 in visible light. It looked like a hazy mane, but Webb's advanced infrared cameras give us exact structural data.
This reveals a bigger trend. State agencies are pouring immense resources into rapid technological dominance. We see the exact same thing back on Earth with artificial intelligence.
Right. The United States recently gave artificial intelligence models special exemptions from national security rules. The incentive is clear. Rapid innovation and winning the tech race currently override basic safety rules.
Bringing it closer to home here in Germany, let's look at the European perspective. The weather is hitting the wallet hard. Extreme heat is costing the European Union €180 billion this year.
That is roughly 1% of the European Union's gross domestic product. GDP is just the total value of all goods and services produced. France alone might see its economy shrink by 0.6%.
Right here on the Rhine River, the water at the Kalb choke point dropped to just 16 centimetres. Cargo barges can only carry 1/5 of their normal load.
The power dynamic here is interesting. Southern Europe is used to the heat. They adapt. But Northern Europe's temperate economies are highly vulnerable. Climate impacts are acting like a hard ceiling on industrial capacity.
The good news? These are cyclical shocks. Crops drop and productivity dips, but factories do not vanish. The physical capital survives to build another day.
Over in Leipzig, there was a major drone incident at the airport. An explosives-equipped drone severely disrupted logistics.
But German Transport Minister Stefan Bilger made a clear choice. He refused to deploy the Bundeswehr, that is Germany's national armed forces, to handle it.
Who benefits from that call? Civilian agencies. Minister Bilger categorised this as an infrastructure security issue, not a military event. This keeps domestic power and resources strictly in civilian hands. It stops the military from expanding into everyday domestic policing.
Finally, a quick hop over to the United Kingdom. Britain just approved a new weight loss pill from Eli Lilly. The NHS, the National Health Service, which is England's public healthcare system, will decide on coverage by November.
This is a classic post-Brexit story. The United Kingdom is moving incredibly fast on drug approvals. They want to prove they can outpace the slower European Union regulators.
Pharmaceutical companies benefit massively here. They can roll out their highly profitable drugs faster in Britain. Money flows to the most agile regulators, while European Union patients wait.
Let's take the day's temperature. We are seeing a world where billionaires park wealth in scarce sports monopolies and global capital abandons fragile physical supply chains for tech dominance. Meanwhile, extreme weather acts as a strict speed limit on European industry. Across the board, power and money flow towards speed and scarcity, leaving slower physical systems vulnerable.
Spot on, Mary. And that is your gist for Monday, August 10th.
If you enjoyed today's breakdown and want to stay one step ahead, join us on the written side. You can subscribe to the Gist's daily newsletter entirely for free. Just tap the link right there in your show notes.
Thanks for listening. We will see you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.